What is a financial plan? A financial plan is a written description of a person's current financial condition, long-term financial objectives, and plans for achieving those objectives. A financial plan can be made independently or with the assistance of a professional financial planner and begins with a detailed assessment of the person's present financial situation and future expectations. Understanding the financial plan. The first step in building a financial plan, whether you're doing it alone or with a financial advisor, is accumulating a lot of scraps of paper. These days, it's more probable that you'll cut and paste data from several web-based accounts into a document or spreadsheet. You may complete the following steps as an individual or a couple. Calculating net worth. Your assets could be anything of value that you possess, such as a house, a car, money in the bank, investments in a 401, and so on. Your obligations. These may include unpaid credit card balances, student loan debt, an unpaid mortgage, and unpaid auto loans. You might occasionally be able to use a grace period or a moratorium. The formula for your current net worth is your total assets minus your total liabilities. Determining cash flow. Without understanding where your money is going and when it is going, there is no way to make a financial plan. You may estimate how much money you need each month for essentials, how much might be left over for savings and investments, and even where you can make some small or significant cutbacks by keeping track of transactions or the movement of money in and out. Examining your checking account and credit card statements is one way to accomplish this. They ought to offer a fairly thorough history of your spending when taken as a whole. In order to determine your average monthly spending estimate, it is advisable to look at your expenses over the course of a complete year. Do this by adding up all of your spending in each area and dividing by 12. This way, you won't under or overestimate your utility costs, and you also won't forget to budget for gifts for the holidays or a trip. Keep track of the fundamental housing costs you've incurred over the course of a year, such as rent or mortgage payments, utilities, credit card interest, and even house furnishings. Record separately your actual expenditure on entertainment, eating out, and travel expenses after adding categories for food, clothing, transportation, medical insurance, and uninsured medical costs. Your own spending categories will be obvious as you review your financial records. You can have a pricey hobby or a lavish pet. Record the expenses. You'll be able to calculate your cash flow once you sum together all these figures for a year and divide by 12. Considering your priorities. A person's well-defined goals serve as the foundation of a financial strategy. These could be paying for the kids' college educations, getting a bigger house, starting a business, retiring on schedule, or leaving a legacy. Nobody can instruct you on how to rank these objectives. However, a qualified financial planner might be able to assist you in selecting a thorough savings strategy and certain assets that will enable you to cross each one off one by one. The main elements of a financial plan include a retirement strategy, a risk management plan, a long-term investment plan, a tax reduction strategy, and an estate plan. Special factors to consider in a financial plan. There is no predetermined format for financial plans. A qualified financial planner will be able to design one that meets your needs and your goals. Once finished, it might inspire you to make short-term adjustments that will help you go through the financial stages of life with ease. The following components ought to be addressed and amended if required. Retirement strategy. No matter what your priorities are, your plan should contain a method for gathering the necessary retirement income. Comprehensive risk management strategy. This takes into account a study of catastrophic, property and casualty, personal liability, life and disability insurance, and personal liability coverage. Long-term investment plan. An individual strategy based on a person's risk tolerance and definite investment goals. Tax reduction strategy. A method of lowering taxes on personal income to the degree that it is permitted by the tax code. Estate planning. Making decisions that will benefit and safeguard your heirs. What is the purpose of a financial plan? A financial plan is created to assist you in making the greatest use of your funds and achieving long-term financial objectives, such as paying for your children's college expenses, upgrading your home, leaving a lasting legacy, or taking pleasure in a happy retirement. How do I write a financial plan? Either you or a professional financial planner can create a plan for your finances. Finding out your spending patterns and calculating your net worth is the first step. After this has been recorded, you should think about longer-term goals and devise strategies to accomplish them. What are the key components of a financial plan? Although there is no set style for financial plans, The best ones tend to concentrate on the same topics. He'll examine your financial goals and come up with solutions to make them attainable after figuring out your net worth and spending patterns. This typically entails budgeting in some fashion and setting up a way to save money each month. It's typically advised to develop a retirement, risk management, and long-term investment strategy and keep tax expenses to a minimum in order to ensure that you live comfortably for the rest of your life. That's all for today. Hope you liked it. Thank you.